There's a specific reason why short-term rental regulations still matter if you're going to do the midterm rental insurance strategy. And here's why. And I typically, unfortunately, find a lot of people that I consult or come into the lab will ask me questions related to, hey, I'm in a situation where I'm not allowed to do short-term rentals and I want to use the midterm rental strategy. That's all good and done, but however is I want you to maximize from your asset. And if you're already putting yourself in a position where you can do short-term rentals, because we use short-term rentals as a backup strategy or use it in the interim of midterm rental stays, it will put you at a significant disadvantage. So here are the key things you need to focus on when looking for your next MTR and how you should factor in short-term rental regulations. There's actually two regulations. I wanted to get mention the short-term rental regulations first because that's my rule of thumb. If there's an area that has short-term rental regulations, it does not mean to not move forward with the MTR. It's actually great to have short-term rental regulations in place. Here is how you're able to discover what the short-term regulations are in your marketplace. It will typically be covered at the town level or at the county level. So what I do is type in on Google, simple Google search, short-term rental regulations in X town in X county. So to pull up your county of your subject county, your county of choice, the one you might be looking to invest in, the one you might be looking to co-host in, the one you might be looking to manage your property in, and have a look at what they're saying. Have a look at the regulations. If it needs to be a primary, if it needs to be occupied for a certain amount of time, whatever that time is, make sure you're compliant. You never want to build a business on a faulty foundation. You want to make sure you're doing your due diligence up front. There's too many people that I've spoken to which will buy properties because their realtor gave them the green light or someone said it was okay, and then they find out that they can't do short-term rentals, which puts you at a significant disadvantage in the marketplace. Because although you might be looking to optimize for midterm rentals because we know it's less turnover, less headaches, you put a tenant in there at a more premium rate, and then you're able to capitalize on that, and you probably are not in the game to do Airbnb. That's great and all, but we still want to be able to leverage it as a strategy. We as investors want to mitigate risk, and it's in your best interest to mitigate this risk up front before you buy an asset of any kind. So what you want to do, again, number one, type in Google short-term rental regulations in your market, in your town, in your county, and then read up on it, see what it is, see what the process is. As a matter of fact, what I would even suggest, if there's any confusion, because sometimes the language or jargon can be confusing, pick up the phone, send an email, call in and say, you're asking on behalf of a friend, on behalf of a family member, on behalf of a client. Say, hey, I might be looking to manage a property in this area and I wanted to know what my options were. I see that there's short-term rental regulations. I've never done it before. I would like to know a little bit more about what it entails, what the process is, so that I can report that back to my client. Done. Takes pressure off. You don't have to say the name of the subject property. No one wants to have a X on your back or a target. Just say it is on this street, it is on this road. If not, put your neighbor's address, for Christ's sake, right? Because what you want to do is you just want to understand what's going on your street, on your block, in your zip code. And maybe if they start asking questions about is there a specific address, you don't say the address, say the zip code. Say, hey, I'm looking in this zip code because I'm looking to purchase and I want to know what my strategies might be. This is John Doe, by the way, right? Just so if you're feeling like you don't want to put your name out there, not a big deal. These towns are there for a reason. They might pick up with a great attitude, they might not, but either way, your job is to get the information that you need to make the right call, because the last thing you want to do is go with the word of a realtor. I'm a licensed realtor as well, but not all realtors are created equal, and it's really important that you get the right information from the right person, from the source in writing, right? And you want to make sure you get the latest and greatest. Yesterday's regulations is not the same as today's regulations, so get your latest and greatest information. Things change over time. Now that's number one. Number two, this is why I always say on top, in addition to the short-term rental regulations, do not shoot yourself in the foot. And this is why I actually steer away from HOAs, which you can see in one of my next videos, is because you want to make sure that you're looking at CCNRs. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it and continue on with the gems in this video, which is another word for covenants, conditions, and restrictions. You want to make sure you read in there what it entails. But even if short-term rentals is not in there, don't think it might not be. You want to get a temperature of how that HOA feels about short-term rentals, and we can go into it into more detail. But I would strongly advise you to go away from that, because you don't know when that may change and that may restrict you in the future, especially if there's things such as 2 6-month minimum contracts or 12 months only contracts. Then you put yourself in a dire situation. But again, you want to make sure you're compliant, and you want to make sure you do your due diligence up front, because here's the thing. While we are going to strategize to focus on these midterm rental insurance relationships, which sometimes have nothing to do with OTAs, nothing to do with putting your property out there, there's still online OTAs, online travel agents, such as Airbnb, such as Expedia, such as VRBO, such as anything that puts our property out there that says we're in the business to rent. We want to make sure we have full reign and no restrictions, and that we're not tiptoeing around the regulations. We want to make sure we're being compliant. So therefore, I want you to be compliant and align with your short-term rental regulations, because if you are not, you're shooting yourself in the foot and you're giving yourself a huge disadvantage, because the midterm rental is considered a 30-day stay or more. But then oftentimes we've had families even stay for 2 weeks or 3 weeks, right? Or start with 1 week, and you're missing out on that business. And that business is considered, in my eyes, still, midterm rental bookings, right? You're not your 2-3 night stay, but it's still significant enough where they might extend. We've actually had a lot of families start with just under a month or a month, and then they continue to extend. I want to not only be able to service those families and still provide myself an opportunity to receive occupancy, even in the interim of a long contract, like a 6-month, 8-month, 9-month, or 12-month contract that I can get with an insurance company. Thirdly, and lastly, and most importantly, it's that these online travel agents like Airbnb, etc., do and are leveraged and are used by relocation specialists and policyholders who are looking for temporary housing. And if I'm not allowed to be on those, or if I, am not allowed to do short-term rentals, then maybe there's some regulations that will get my listing, flagged by either an HOA or regulation or someone who's looking through. So I don't want to, have a listing that's out there that's putting my business at risk. So I don't want to go against the grain if I don't have to. And for those reasons, this is why the short-term rental regulations are so critical for me to abide to. It's so critical for you to abide to, so critical for you to be in alignment with, because if not, it's not that you cannot get your property filled, but you're reducing a large amount of traffic. And in the interim between your stays, you're also not giving yourself an opportunity to get bookings from short-term rental clients, because like I said, I always use the analogy, we don't want to be, or we're just like the airline industry. If the plane takes off with empty seats, we're losing money. Where properties are sitting furnished, able to service somebody while we are waiting for that midterm rental contract, or optimizing or marketing, or to get those midterm rental insurance contract. If someone can stay for 2 days, 3 days, 4 or 5 days, we want to make sure we capitalize on that and still generate income anytime our property is available, which is always, because we're always open for business, right? So that is the idea, and this is why you should take your short-term rental regulations and local laws very seriously, so that you give an exit strategy to your business. Keep in mind, we're always optimizing for midterm rental insurance contracts, which again can be found on online travel agents, on Zillow, Furnish Finder, a lot of different databases where you can put your properties on, which is important. That's our number one priority. But if there's a drought in your marketplace, or if there's lack of a demand needed from time to time, because timing is everything, you want to make sure you have your backup plan and you can turn on the Airbnb listing, turn on your short-term rental without having to feel like you're tiptoeing around the red tape that exists in your marketplace had you done the work. Now, can things change? Will things change? Yes, they may. So maybe the regulations are going one direction, that's great, and then they shift, that's another. But what's really important to note is typically short-term rental regulations, if you get a temperature of what's going on in your marketplace, you'll get a chance to find out that due to government, things take time to be implemented. So if someone in your local market, if they're maybe starting to talk about it, if they're talking about putting regulations in, by the way, regulations are not a bad thing, because they, what happens is they actually increase the competition, because most people are now willing to send out a few documents and fill it out, which is great. So I like that, because it kind of reduces the amount of competition that there is, and you want to be a professional that stands apart. But typically, if you're rolling out these regulations, it might take time until it's actually fully implemented and enforced. So if they're not talking about it, great. If there is no short-term regulations, good for you. If there are short-term regulations, understand what the implications of those short-term regulations are, what the steps are, who's grandfathered in, who's not. Is there a waiting list? Is there not? Right? What is the process? How long it takes? Get that information up front before you invest your hard-earned money into an investment or sign a contract with a co-host or a management company, etc. Keep in mind, it's not that it won't work, but my goal is for you to increase the amount of chances that you have to succeed in this space, to increase your occupancy and your profitability. If you got value from this video, make sure you check out why your MTR shouldn't be in an HOA.